Welcome to today's more report on Wednesday the 25th of May with me, Rich Pro Market Analyst at Anti Markets. We've got a strong start again to the European session. Basically, trading sentiment has picked up significantly since yesterday. What we have had is a couple of factors really. The oil price has pushed in higher again, sort of confirming this move, breakout above the recent consolidation, and now pretty much opens up that key October high that you can see back here, 50.90. And also what we had yesterday was some really strong US data actually. The housing sales, new home sales, the highest since January 2008. Really strong numbers there from that new home sales, and that really pushed on the markets yesterday afternoon into the close. And we have seen a continuation of that. Wall Street closed very strongly last night. We saw Asian markets up overnight. Positive sentiment certainly helped because the yen weakness helped to drive the Nikkei higher. That has now spilled over into the European session. So we're seeing between a 0.5% and 1% gains on the European markets. So that's basically just filtering through all these markets, and you can see here with treasury yields as well pushing higher as well. Again, both the 2-year and the 10-year slightly sort of lagging a little bit, but certainly the 2-year up strongly. And what we have seen is also the dollar strengthening yesterday. But you could also argue that the dollar strengthening is that actually going to be sustainable for the equity markets pushing higher, because generally you tend to see the equity markets sort of having a negative correlation to the strength of the dollar. But it'll be interesting to see if this one continues. In terms of economic data today, nothing out US side. We've just had out the IFO, the German IFO business climate, which came in slightly above expectations at 107.7, so that was a positive. And then that sort of moves into the afternoon when we've got the Bank of Canada giving its monetary policy update. No move expected from the plus 0.5%, but obviously any sort of chat about inflation and potential for further rate cuts would be interesting and certainly would move the markets. But at the moment, and then we're sort of moving on to the EIA oil inventories report, which is expected to see another drawdown actually of 2.5 million barrels, following on from last week's oil inventories increase of 1.3 million. So that oil inventories report does tend to be a mover for the oil price. So that takes me to my chart today, which is silver. Now we've seen this sort of recovery in risk sentiment, and also the dollar strengthening, and that's two factors that have basically pulled down all the precious metals. So it's silver and gold both coming under pressure in the last sort of few days, and actually that sort of confirmed the move, the breakdown of this top pattern. That top pattern from 18 figure down to sort of 1680 area as the neckline. Confirmed breakdown of that gives you an implied target of 1560. So there is some still further downside potential in this move, but my argument is that we're now at a key crossroads, I think, on silver. See that RSI back at levels that basically the key lows have tended to come in throughout this run higher. So it's sort of on the brink of changing that outlook. But look at the stochastics, how negative that is. MACD lines are on the brink of going crossing negative as well. But look at this pivot line at 1615. Couple of key highs over the last year have come in at 1615, so that is a key breakout level that the market could well find that as supportive, and today it seems to be seeing that. 1617 yesterday's low, today's low very slightly below that 1614, but bounced up to 1626. I still think that what you'd be looking out for is selling into strength on this silver run lower, because it seems to be that is certainly the corrective move. But watch out for that RSI at 40 on the daily chart. Now looking on the hourly chart, you can see here a very slight improvement in momentum, and that's only because of a very sort of instead of going oversold into oversold territory, it's now sort of forming support around the 30 level on the hourly RSI. Also, the MACD lines are not as negative as they were. So you'd be looking out for a technical rally possibly, and I'd say 55 on silver seems to be the limit on the RSI. And so if you see it into the high 50s, into 60s, then I think you could see a bit of a technical rebound going on. But initially you've got the resistance that comes in with yesterday's high at 1643, and then 1665 as well, which was Friday's high, and then 1680 being that old neckline as well. So it certainly seems as though the oil price is sort of beginning to settle a little bit, but this sequence of lower highs suggests that the pressure is still on, and if it does certainly sort of break down below 1615, I think that we could see further weakness in due course. The initial support 1588, but certainly this uptrend that silver's basically been in before it accelerated away in April, and the uptrend doesn't come in until sort of 1550 area, which again would be not too far off the implied target from that top pattern. So interesting times on silver, and I wish you good luck in your trading today, and I will speak to you later.